Hi everyone, my name's Karyn Ferguson. I'm a manager here at Morgans and I'm going to be interviewing Steven Wright, Director of Fixed Interest at Morgans, about a new offer that we're excited to be launching today for Australian Unity. Morgans is a joint lead manager and arranger on the offer, and we're very excited today to be giving you a bit more information about the offer and particularly Australian Unity and their mutual status. So welcome, Steven.
Hi, Karyn.
So firstly, can you just give us a little bit more information about Australian Unity and particularly, what are they, what's their mutual, what does it mean to be a mutual for them?
Yeah, sure. Well, I guess let's start with a mutual.
Yeah.
So a mutual is just a member-owned organisation. And so unlike a listed company that sits on, say, ASX, where they have to answer to a whole range of stakeholders, including shareholders, in the case of a mutual, the members are the ones that actually also own the company, and the company is there to provide services to its members. So Australian Unity in particular operates across a range of sectors, and that includes basically wealth, so banking and wealth, aged care, home care, and health insurance.
Yep.
So it provides a very diverse range of services to the community, and as people use those services, they then become members of the organisation.
So the offer of Australian Unity today, it's the very first of its kind for a mutual capital instrument to Australian investors.
Yeah.
Can you tell investors that might be considering and investing in this what a mutual capital instrument actually is?
Sure. So up until 2019, mutuals owned by their members, the only capital they had access to was the profits that they generated each year. Because being a mutual, they couldn't pay dividends out to members, so they retained those profits, and that became the capital base upon which they could continue to grow the business. So in 2019, the Corporations Act was changed to allow mutuals to raise external capital via MCIs, mutual capital instruments. So new investors can inject capital into the business and then receive dividends in return dividends as a return on that investment. One of the interesting things about mutuals is that members can't be paid dividends through time. So the capital they have or the retained profits stay in the business forever, except now that there is an avenue for certain investors, mutual capital investors, to receive dividends.
And we have interest rates at all-time lows at the moment in the economy. And so can you just talk about how do these mutual capital instruments or MCIs fit into a diversified portfolio for an investor? And what do investors need to think about when they may be considering investing in an MCI?
Yep. Well, I think firstly, MCIs will be a higher yielding investment. And it's important to remember they're not bank deposits. They clearly carry a higher level of risk than say a bank deposit does. So they fit into a portfolio in a diversified sense. So people who are seeking higher levels of income would typically build out their portfolio holding various instruments from different issuers and as I said, various types of securities in the portfolio. So diversification is really important. Thinking about the instrument, what it is, well, being a capital instrument, it is permanent capital for Australian Unity. Yeah. Investors can still trade the securities on the ASX, so there is liquidity via ASX, but it's not like that money will mature at some point in the future. Thinking about the return profile, clearly, they will be attractive for investors. So at a dividend rate of say 5% per annum, including franking, that will gross up to a little over 7%. So as I said, quite attractive, but part of a diversified portfolio, and clearly people need to understand the risks and the way the instruments could be impacted by different circumstances. The prospectus is a good place to start to understand those issues.
Yeah, and you did mention franking there, so the dividends that will be paid on an MCI will be fully franked, will they?
Yeah, that's the expectation. Yeah. Certainly Australian Unity, even though it's a for-purpose business, it's always been a for-profit business. So it's actually paid taxes in the past and has a franking balance in place. And because they haven't been able to pay dividends to ordinary members, those franking credits haven't been paid out. So investors in the MCIs will have access to those franking credits as part of their return.
Yeah, and that's a great opportunity for investors. So let's move on to ESG. I think it's quite a topical issue at the moment for investors. how Australian Uni is very focused on ESG, particularly the S or the social side of ESG. Can you tell us a little bit about how Australian Unity looks at ESG from their business perspective?
Sure. I guess Australian Unity moved to and had a purpose-built new head office in Melbourne recently. It's rated the highest green standard in terms of its construction and design, etc. So I think that's been a consideration of the way that they've operated their business. The environmental and the social element, I guess, can be shown through the development of the Hurston Medical Precinct here in Brisbane, where Australian Unity, through its various operations, is constructing and operating elements of that, and it feeds into their social purpose, provision of medical and health services in the community. The other area, of course, is the nature of Australian Unity's operations, providing services that for the well-being of the community. And in fact, Australian Unity developed a wellness index, which allows them to measure and look at the wellness or the well-being of the community more largely, and in fact how and what their contribution to that is through their services.
Yeah, that's an interesting. I like that index. So let's just give everyone a quick overview of the offer. What do people need to do if they are interested in investing in Australian Unity?
Sure. First place, get a prospectus and have a read of the prospectus. That's really important. The offer size is for $100 million. They will be paying semi-annual dividends, so dividends will be paid twice a year, including franking. There is a gross-up clause, so for example, if a dividend wasn't franked, Australian Unity would make up the difference through a cash payment. So that's important to remember, because a lot of people would use this as part of an annuity stream in a portfolio. As I said before, if people are interested, read the prospectus, contact their advisor, and just understand the risks, how the securities will perform in different environments, and whether it's suitable for their portfolio.
Yep, that's great. Thank you very much for today. It's a great overview, and hopefully everyone got some extra information about Australian Unity. Thank you.
That's great. Thanks, Karyn.